Hello everyone and welcome to today's session. So today we are going to continue our chapter 7 and we will be covering the rest of the essays that we wanted to cover. Okay. Till last session what we did is we covered essay 700, 701, 705. Okay, and we discussed in detail. So remember in essay 701 key audit matters, we discussed about the key audit matters, the definition, how to select the key audit matters, and we went like what to report, how to report, okay, when not to report the key audit matters in case of a disclaimer of opinion. Okay, we discussed in detail in last lecture. Then with respect to essay 705, we understood how we need to bifurcate between different type of opinion, adverse opinion, qualified, disclaimer of opinion. Also we went ahead and we verified that okay, how we look after for the different type of opinions in case of wordings also, like when I say modified opinion, like qualified opinion or adverse opinion, then how the wordings change with respect to the opinion paragraph, basis of opinion paragraph, auditor's responsibility paragraph. Okay, so we went and we discussed and in detail that how a different type of opinion is issued and how it is impacting your form and content of your audit report. Okay. Now we will go ahead and we will see a very important part of chapter 7, that is essay 706. Essay 706 caters two important areas. One is an EOM paragraph, and second is OM paragraph in the audit report. Now, what is EOM paragraph? What is OM paragraph? How they are different from your essay 701 para or a modification or a going concern para, that is very important to understand. Okay. So first we will understand what is EOM and OM paragraph, how they appear in the audit report. Okay. Then we will try to understand how they are different between your 701 or 570 reporting or any other reporting. Okay. Great. So let's understand that thing. So when I talk about EOM paragraph, that is known as the emphasis of matter. Emphasis of matter paragraph. Okay. Now this emphasis of matter paragraph, when I talk about emphasis of matter, the term emphasis of matter, that I am providing emphasis to a particular point. I am providing, importance to a particular point. So emphasis of matter paragraph, when I talk about, it is a paragraph in audit report. A paragraph in audit report that refers to a matter appropriately presented or disclosed in financial statement. And that is of such nature in the auditor's judgment is of such importance Okay, that it is fundamental to the user understanding. Of financial statement. Okay, so emphasis of meta paragraph. Let me break down this what I have written. So emphasis of meta paragraph. First of all, it is a paragraph in the audit report that refers to a matter presented or disclosed, matter presented appropriately or disclosed in FS. So there is something in the financial statement already presented, already disclosed. I am referring that particular point or that particular matter through emphasis of matter paragraph. Okay. Then that in auditor's judgment is of such importance that it is of such importance that it is fundamental to the user understanding, fundamental to the user understanding. For user understanding of what? User understanding of financial statement. And this is very important part. Okay. Again, there is a matter which is already there in the already presented in the financial statement. The matter is already there. Now, the matter is of such importance that I say that it is fundamental to the user understanding of financial statement. So when, if I present in an equation form, when there is a matter disclosed in FS plus that is having importance of such level that is it is fundamental to the user understanding. Okay. Now, user understanding of what? Fundamental to the user understanding relation to financial statement. Now, understanding related to financial statement. So, if there is a matter which is important and fundamental to the user understanding, in that case, then that matter can be called then that matter can be reported in emphasis of matter paragraph. Okay. So this will be then reported in emphasis of matter paragraph. Fine. Okay. Kind of a equation form of EOM paragraph. Okay. Now, this is EOM. Then the next paragraph is other matter paragraph. Now, what is other matter paragraph? Other matter paragraph, okay, talks about a paragraph again in the audit report, a paragraph in the audit report, okay, that refers to a matter other than those other than those presented or disclosed, presented or disclosed in the financial statement that in the auditor's judgment is relevant to user understanding of the audit, the auditor's responsibility, or the audit report. Now let us break this down and understand in further detail. So when I'm talking about a other matter paragraph, so a other matter paragraph refers to a matter. Again, the matter is there, but which matter? Matter other than those presented or disclosed in the financial statement. Means this matter is not there in financial statement. Unlike my, unlike emphasis of matter paragraph where the matter was disclosed in financial statement, the first point here is matter other than means not disclosed in the financial statement or other than those presented in financial statement. So matter other than those presented in financial statement. Okay. Now, next part is that in auditor's judgment, this particular matter which is not disclosed in the financial statement or which is, something else, okay, other than what is disclosed in the financial statement is relevant to the user understanding. Now, user understanding with respect to what? User understanding regarding what? User understanding regarding your audit, auditor's responsibility, or audit report. Okay. So, matter other than those presented in financial statement. Okay. Now, this matter is relevant to the user understanding. Relevant to the user understanding plus understanding regarding related to audit, understanding related to audit, auditor's responsibility, and audit report. Okay. So, unlike my emphasis of matter paragraph, this paragraph here, okay, deals with the matter which are not there in the financial statement and are related to audit and are related to audit. So let's say, for example, let's discuss with an examples, okay, some questions that where we will classify those matters that, are coming up. Okay. Let me move there. Okay. So we need to correctly classify the matters which are, coming up, like we will discuss now. So let's say first part. So I will be, listing down some matters. You can tell me where to report. Auditor wants to bring to users' attention that during the year, management of XYZ Limited decided to decided to acquire ABC Limited at rupees, let's say 2500 CR, which will be paid in next 5 years, partly through cash and partly by issue of equity. This information is also presented by management in their financial statement. Okay. Second matter. Auditor wants to bring to attention of user that during the year management disinvested its loss making segment disinvested its loss making segment for rupees, let's say 500 crores. This amount management is planning to invest in other mergers and acquisitions. This information was not reported by management in financial statement. Okay. No details of disinvestment were mentioned in any notes to FS. So let's take one more. Okay. Auditor wants to bring to attention of users during the year, there was fire in one of the unit of unit of plants, or manufacturing one of the units of manufacturing segment, resulting in loss of rupees 180 crores, which for which a claim was filed with insurance company. Claim for which was filed with insurance company. Okay. This claim was reported as receivable from insurance company in financial statement. On 30/3/2023, the claim was rejected by insurance company. However, no appropriate changes or no appropriate rather disclosure for this was done in financial statement. So there are three matters that we want to discuss. Matter one, auditor want to bring to users' attention that during the year, management of XYZ Limited decided to acquire ABC Limited at rupees 2,500 crores, which will be paid in next 5 years, partly through cash and partly by issue of equity. Maybe cash. This information is also presented in this information is also presented by management in their financial statement. So first one, what do you think, guys? What do you think of first one? Okay. Good. Very good, guys. Very good. So the question is that let's say, for example, these are the information that auditor want to disclose or want to bring to the user's attention. If the auditor wants to bring this to the user's attention, then how auditor should do that in through his audit report? By using which paragraph? So the first one is auditor want to bring to the user attention that during the year, management of XYZ Limited decided to acquire ABC Limited at 2,500 crores, which will be paid in next 5 years, partly through cash and partly by issue of equity. This information is also presented by management in their financial statement. So how auditor should disclose this information if he wants to bring to the user's attention in his audit report? Okay, Jigar. Okay, Sailesh. Very good. Very good, Jigar. Yodogannalu. Very good, Sailesh. Good, Geeta. Good, Charu. Very good. Good, Tanisha. Okay. So as of now, park your answers here. Okay, let's move to the next one. I will discuss answers all for to. I will discuss all answers together. Second, auditor wants to bring to the attention of the user that during the year, management disinvested its loss-making segment for rupees 500 crores. This amount, management is planning to invest in other mergers and acquisitions. Okay. This information was not reported by management in financial statement. No details of disinvestment were mentioned in any notes to FS, where the auditor can disclose this information. Where do you think it will be appropriate for auditor to disclose this information? In which paragraph? Come on, guys. In which paragraph? Okay. Good. Good, Tanisha. Good. Very good. Okay. Again, I would suggest good Shruti, good Sailesh, good Yedukundalu. Very good. Okay. So as of now, I will suggest let's park this answer also and move to the next one so that at when I will discuss all together, you will get a more and good understanding. Okay. So the next one is auditor wants to bring to the attention of the user that during the year there was a fire in one of the unit of manufacturing segment resulting in loss of rupees 180 crore for which a claim was filed with insurance company. This claim was reported as a receivable from insurance company in financial statement. On 30/3/2023, the claim was rejected by the insurance company. However, no appropriate disclosure for this was done in financial statement. Where would you report or where the auditor should report this particular paragraph or this particular matter? Where would you think that auditor should report this matter? Okay, good Jigar, good Charu, good Tanisha. Okay, good Geeta, Sailesh, good, very good Pradeep, good Shruti, very good Yurogonalu. Okay. Let us see the answers now. Okay. First one. So first one, now we need to understand few things before we decide the answer. That okay, user understand attention is required to the matter. Fine. Matter is appropriately presented by management in FS. That is there, appropriately presented. Amount is material. Okay. And there is some, new entity being acquired. So I could say it is kind of, you can say, fundamental to the user understanding. Okay. In relation to the financial statement. Okay. So it is of such importance that it's fundamental to the user understanding of financial statement. I could use EOM paragraph over here because my all conditions are meeting. Perfectly fine. Second, okay, there is a disinvestment. Again, this information is not reported in financial statement. No information or no details of disinvestment were mentioned in any notes or to financial statement. Amount is material. Okay, this is relevant to the user understanding of also. So, an auditor wants to bring to the understanding attention of the users. This is relevant to the user understanding. Plus, not disclosed other than matter disclosed in the presented in financial statement. So, you guys have seen other matter paragraph. Okay, but that is wrong. This is not other matter paragraph. This is modification. Reason because, first of all, other matter paragraph, for other matter paragraph, I need something that is related to the audit, auditor's report, or auditor's responsibility. Other matter paragraph only deals with the audit report, auditor's responsibility, or audit. If this is not the case, with means this is not related to the audit. When I say audit, means audit procedures, what auditor has done to verify the number, auditor's responsibility, or audit report. If this is not to do with any of these things, then it's not another matter paragraph. Number two, in that example, there is no disclosure done by management. Fine. But if you look, if you see Ind AS 108, that is operating segments. Any change in the segment is required to be disclosed appropriately. Now, this particular Ind AS is my applicable financial reporting framework, which is not complied here. That's why this becomes modification. So either I will issue a qualified opinion or a adverse opinion, depending upon the persuasiveness of the my misstatement. Here there is a missing disclosure that was supposed to be there. Third, again, so this is again material amount. This has been reported as a receivable. This has been reported as a receivable, means some reporting has been done over here. So some reporting has been done already over here. Okay. Amount is also material. Some reporting has been done. Amount is material, and it is again related to a loss and fire. So, important understanding, fundamental to the user understanding of the financial statement. So this is can be called fundamental to the user understanding of the financial statement. So most of you answered this one as a EOM paragraph. Correct? But that is wrong. OM paragraph, that is also wrong. Again, this is a modification. Number one, the claim has been rejected. I cannot show that is a receivable from insurance company. No, that is wrong disclosure. The disclosure here is not appropriate. And hence, this is a modification. So not all the things are EOM paragraph or OM paragraphs to be reported. First, understand that where it is appropriately required to be reported. If not a part of my modification, not a part of my key audit matters, not a part of my going concern, then you can think of EOM and OM paragraph. So to report a matter in EOM or OM paragraph, first I need to check few things. Before reporting a matter to EOM and OM para, I need to check few things. That this matter, okay, this matter which I'm talking about, first should not be a modification, and as per SA 705, second, this should not be a key audit matter when SA 701 is applied. Third, it should not be matter related to going concern required to be reported as per SA 570. So these are matters which are different, and this is different. And auditor is required to mention that auditor's opinion is not modified in the or for the matters that are reported in EOM or OM para. So auditor is required to mention that these matters, for opinion for these matters, is not modified. So auditor is not issuing a separate opinion for these things. Now, again, so there are queries that for second and third matter, where I said modification, whether this modification will result in adverse opinion or disclaimer of opinion. See, now that depends upon the rest of the numbers. What if the turnover of company is in lakhs of crores? So I need to see like this modification is required to be evaluated based on one, materiality, second, pervasiveness, because that is very important to understand, whether my, what do you say, whether my misstatement here is material and pervasive both or not. Okay. So I need to understand whether my misstatement is material and pervasive. If yes, then adverse. If no, then I need to think whether it's only a qualification or not. Okay. Any doubt? Any doubt? So that is something about my EOM and OM paragraphs. Let us see some questions on this particular matter, uh, which are also given in your study material. Okay, here is the illustration which is given. No, Shruti, I think it's not there. Can you rewrite it again? That will be really important, helpful. Any doubts? Anyone? Any doubts? No? Okay. So let's see the illustration 9. And meanwhile, guys, if you have any doubt, you can write it down. You can, send, write in the chat box and send at any point in time. I will take it up as and when I will receive the doubts. Okay. So let us continue. In respect of the audit of BDS Limited, the statutory auditor of the company noticed some matters. The statutory auditor want to draw the attention, user attention towards such matters. Through his opinion, though his opinion is not modified in respect of such matters, draft the relevant paragraphs of the audit report for the following matters. 1. The company has planned to resume its construction activities with respect to one of its thermal power project. The activity of such power plant was suspended in FY 2021. The thermal power project comprises of the plant equipment amounting to 5.595 CR and capital work in progress in 147.50 crores. So you need to draft a relevant paragraph. So tell me where you will report first one. The company has a plan to resume its construction activities with respect to one of its thermal power project. The thermal power project comprises of this plant and this work in progress. How will you report this? Where you will report this, guys? Okay. Anyone? Okay. So this matter, correct, Jigar? Correct, Edu Nalu? This matter will be reported in EOM para. Now, can anyone draft the EOM para? Okay, if I give you, this opportunity that, okay, please draft an EOM para for this, how will you draft? So you are required to draft the details of EOM para over here. Like, if anyone can provide me a simple draft of EOM para that, okay, what they will write. Come on, guys. Yes, Shruti, it's there. I suggest let's take, you know, invest 2 minutes over here and understand how to draft an EOM paragraph. So I will request everyone to at least attempt by taking 2 minutes to draft an EOM paragraph for this matter. Yes, Shruti, your query has reached to me. I'll take it in a minute. Don't worry. Again, let's invest 2 minutes, draft 2 lines of EOM paragraph over here. How will you draft? Like, try to draft something and show me here. Like, post in the chat box or answer a question box. I will see that. Come on, guys. Anyone who has drafted the EOM? Anyone? Okay. Very good, Tanisha. Okay, Jigar, very good. Very good, Shruti. Amazing. Okay. Very good, guys. Very good. Okay, good, great. Yeah, absolutely correct. So most of you have answered correctly, drafted correctly. So let's see this matter. So we draw attention to the following notes of the standalone financial statement. So whatever note will be there, here they have given a random number. Okay. Note 27 regarding to the plans of the company to resume the construction and development of activity of the thermal power project. The carrying amount related to the project as on 31st March comprises of plant and equipment and capital work in progress. Our opinion is not modified in respect of this matter. So this is very important line that our opinion is not modified in respect of this matter. Very important. We are supposed to write this line for each, at the end of the EOM paragraph or OM paragraph. Let us see the next part. The BDS Limited, whose financial statement reflect total asset of 90 crores at 31/3, total revenue from operations of 40 CR for the year ended on that date. The financial statement of these branches have been audited by branch auditors. Where will you report this matter and why? Where will you report this matter and why? Let's take a 2 minute, invest a time, and understand where you will report this matter and why. Come on, guys. So, Tanisha, our opinion is not modified in respect of that particular class. So, we are saying our opinion is not modified. We have not modified our opinion. No. So, where will you report this particular matter and why? You might have already seen the answer, so you know where you will report. But I need why. Why I'm reporting over there. I need why also. Why is very important for me. Why is very important for me. So why? Okay, you're gonna look very good. Okay, Pradeep. Okay, Charu. Out of the three, Charu, that you have mentioned, which one here it will be applicable? So you have mentioned it is, relevant to three areas. So out of those three areas, which area you think it is here? Okay, Pradeep, good. Why do you think that should be reported? So most of you answered this is should be reported in other matter paragraph. Okay. Most of you have already answered that this should be reported in other matter paragraph. Now my question comes to you, why? Why I should report this into other matter paragraph? What is, like, I have financial statement mentioned over here. Financial statement reflecting this much amount. Okay. If there is a financial statement, okay, I'm talking about where the total assets are given, revenue from operations is given, means something has been reported already in financial statement. This is already there, already present in FS. If this is already present in FS, why I'm not reporting in EOM paragraph? Why I'm reporting in OM paragraph? Why? Very important. Why? Why I'm reporting this in OM paragraph? Why I'm not reporting under EOM paragraph? What is the reason for this? Come on, guys. But Pradeep, don't you think this matter is already there in the financial statement? Don't you think this financial statement, total asset, total revenue from operations already there in financial statement? So matter is already presented in financial statement. What do you say? Take your time, take 2 minutes more, and give me the reason why. Because as of now, I still not received the answer, appropriate answer why. And answer is pretty much simple for the why. Trust me. Pretty much simple, straightforward. Nothing difficult in that. So the answer of this particular why is pretty much simple. But still, I have not received that answer. Okay, good, Manoj. Okay. Very good, Charu. Okay, correct. But still, the answer is missing. I'll tell you. The answer for this particular why is there in in chapter 3. Remember, in chapter 3, we discussed a particular essay and a particular topic. Let me bring up the notes. Something we were talking about essay 600 using the work of another auditor. Over there, there was something, we were discussing that when principal auditor is relying upon another auditor, then principal auditor has to base his opinion on the reports of other auditor, then the same should be specified in the other matter paragraph. That what is the financial statement that has been audited. Remember, at that particular point in time, I discussed this with one of the example. This other matter paragraph is the one which is specified, and we are looking here as per SA 706. So the other matter paragraph we are referring over is as per SA 706, SA 600 plus SA 706. These both together are deciding the why. This why is because SA 600 says so that I have to report the matter. Although it is, I could say this is, related to the auditor's responsibility and everything, but first it is SA 600 that is coming into picture and asking me to report this matter and how to report this matter in my other matter paragraph. Understand, SA 600 is providing what to report, how to report, both things. How to report, that report other matter paragraph, and what to report, that where you have details of the financial statement, which is audited by some other component auditors. So that's why we specify the total asset, total revenue from operations. In that example also that we discussed at that particular point in time for like chapter 3, okay, in that example also I presented one part of the note that, see, we did not audit the financial statement and other financial information in respect of 12 subsidiaries whose financial statement include total asset of this CR at 31st March, total revenue of this, net cash flow of this. These financial statement and other financial information has been audited by other auditors, which financial statement and other financial information and auditors report have been furnished to us by the management. Our opinion on the consolidated financial statement insofar relate to these amounts and disclosure included in the in respect of these subsidiaries, and our report in terms of subsection 3 of section 143 of the Act insofar related it relates to the aforesaid subsidiaries is based solely on the reports of such other auditors. So, like in detail, what is required to be reported and how it's required to be reported is coming from SA 600. So, the answer of the why is SA 600. Any doubts? Any doubts, guys? So, there is one question that, just a minute, let me check up that question. There was one question, yeah. In our earlier question where, there were multiple paragraphs that we reported, this one over here. In second paragraph, or in second matter, basically, What is the difference between modification and OM paragraph in terms of non-disclosure in FS? See, OM paragraph is not a substitute for the non-disclosure. Not a substitute for the. So modification generally goes into basis of qualified or modified opinion, basis of adverse opinion. So if there is a modification, that will be reported in the basis of modified opinion or qualified opinion, and your opinion title will differ. I will not route through OM paragraph. That will be a wrong, disclosure, because what I say, whenever I report a matter into the OM paragraph or EOM paragraph, I say the matter for this particular matters, my opinion is not modified. That is wrong, because I should modify my opinion. Okay. That's why it is required to be reported as a modification, not OM paragraph. I hope I'm clear. There is one more doubt, that just because it is written in the SA 600, we are writing in OM paragraph, or there is another thing also. So basically, see, SA 600 is the first reason why I'm reporting this into the OM paragraph. But logically, if you see why SA 600, see, every essay or everything is, drafted logically. So if I say, if SA 600 is saying to report in, OM paragraph, then there is a logic. Why? Because it is related to the auditor's responsibility. Auditor has not audited these numbers, but he has relied upon these numbers or audit report, which is provided by the management. So something related to the audit report and auditor's responsibility. That's why SA 600 also says you to report in OM paragraph. Okay. So that's the reason, why we report in OM paragraph. But the prime reason is SA 600, and why SA 600 is saying, because on the law, based on the logic that it is related to the auditor's responsibility. But you should be aware that, it is because of SA 600, first thing it is coming over here. Any doubt? Any doubt, guys? No? No doubts? If no doubts, then let's proceed forward and let's understand, okay, what is there in the audit report. So let's see a few examples of audit report and in these paragraphs. So here we don't have a EOM paragraph, but we will definitely have OM paragraph, that I'm sure. That OM paragraph are majorly, found in the consolidated financial statement, audit report of consolidated financial statement. See over here, other matter paragraph. So this is other matter paragraph basically. Over here. If you read this particular part, that we did not audit the financial statement of a subsidiary. Okay. We did not audit a financial statement of a subsidiary whose financial statement reflect total asset of this much crore and on March, total revenue this much, net outflow this much for the year ended on that date, as considered in the consolidated financial statement. These financial statement has been audited by other auditors whose report have been furnished to us by the management, and our opinion on the consolidated financial statement insofar it relates to these amounts and disclosure included in respect of these subsidiaries, and our report in terms of section 143(3) of the Companies Act insofar it relates to these subsidiaries is solely based on the report of other auditors. Same with this one. If you read this one also, it is on the same line. It is with respect to the unaudited numbers. And this is again with respect to one of the entity where there is another auditor. Okay. So like this way, we have other matter paragraph already, like, the way we discussed, it's reported over here. Jigar, which title means? Like, can you explain a bit further your query? Yes, Yedukundalu, the responsibility lies with the component auditor in these cases. So that is, we already discussed in SA 600, chapter 3. Let us see some more examples. I think we have, yeah, emphasis of matter paragraph. See, we draw attention to note number 24 of the consolidated financial statement, wherein during the year end this much, the board of directors this company decided to provide for interest on borrowing, which was previously not recognized in the books of account, for the reasons stated in the said notes. Accordingly, the figures for the previous year and other current financial liability, finance cost, profit and loss before tax, earnings per share, and other equity have been impacted on such restatement. Consequently, the figures of the consolidated financial statement of parent company also stands restated. The effect of the restatement has in the consolidated financial statement has been disclosed in note 24. Our conclusions on statement is not modified. Now see here. In this EOM paragraph, number 1, we draw attention to the note number this of consolidated financial statement. Means matter is already reported somewhere. Matter is there in the financial statement. Now, they are talking about restatement, which was not previously recognized in the books of account. Okay. Interest on borrowings. And that is fundamental to the user understanding. Why restatement happened? Why? If you will check the numbers with the previous year financial statement or audit report, you will find numbers different. Then it becomes fundamental for the user understanding to provide them why there is a restatement, why the numbers are different compared to the audit report or financial statement which were issued last time. Okay. And the last line is our conclusion is not modified because the restatement has already happened. Okay. So this is how the emphasis of matter paragraph is reported or drafted. Now where this paragraph comes is after going concern paragraph. EOM paragraph comes after going concern paragraph. But OM paragraph comes after, you can say, it's the second last paragraph of the audit report. Just before reports on the other legal and regulatory requirements. Okay. Before that, OM paragraph comes. So you can say second last paragraph of the audit report kind of is a OM paragraph. Clear? Again, let's see the OM paragraph over here. So it says, we did not audit the financial statement of these subsidiaries whose financial statement reflect this much total asset, this much revenue for the year ended of the date as considered in the consolidated financial statement. Again, comprehensive and everything furnished by the management on the same line. Nothing different. Same. And our opinion on the consolidated financial statement and our report on other requirement below is not modified in respect of about these matters. So, again, opinion not modified. That is required to be mentioned. Let's see if we have some more examples on EOM paragraph. No, we don't have here. So OM paragraph is pretty much straightforward. That is there what we saw. Let's see if we something have on the EOM paragraph. Yeah, here we have a EOM paragraph. As mentioned in note 42 of the accompanying standalone India's financial statement, the company has not accounted for the contractual interest income of this much million on loans and investments given to subsidiary, associate, and joint ventures, and further has not accounted contractual payable finance cost of this much million, excluding penal and other interest charges on borrowing for the period of October this to this, pursuant to an order passed by the NCLT specifying the order this as the cutoff date for the intimation of the resolution process and distribution for assets. Further, the company has also not recognized interest expense of this much million and this much on account of non-payment of TDS liability and GST liability for the period of this pursuant to the above mentioned order of NCLT. The regulatory order overrides the accounting standards specified in Section 133 of the Companies Act, read with the Indian Accounting Standard Rules of 2015 as amended, which requires accruals of these income and expenses and has potential income tax implications thereon. Our opinion is not modified in respect of this matter. Now, there is already something mentioned in my note, this 42 of the financial statement. Company is specifying that they have not recognized, they have not mentioned. So, company has already providing this detail in your financial statement. That's why it is part of the EOM paragraph. Clear? Any doubts? Any doubt? No? No doubts? Okay. If no doubts, okay, then here we have ended our essay 706. So this was essay 706, already reported, already as discussed, EOM and OM paragraph. Okay. Now, the next part I want to discuss is about comparative information plus, other information. So there are two different type of, other requirements that is there. Okay. One is the comparative information related details, and there is a other information related details. We'll see in the quickly in a summary form. Okay, not further investing further time on that. So we will go for other information in detail, but comparative and summary comparative information is pretty much simple. There is nothing much in there. Okay. Okay. Before that, what I suggest is let's take a quick 10-minute break. After the break, we'll gather back and we'll continue the session. Okay, let's take a quick 10-minute break. And after the break, we'll continue the session. Uh, so guys, let's continue the session. Okay. Now I see few queries over here. Let's take those few queries first. How other matter paragraph contain modified opinion in this report? See, again, other matter paragraph will be same. There will be no difference with respect to the modification. Okay. And most probably other matter paragraphs comes into the picture with SS 600. If it is a consolidated financial statement. So, as much as I have seen, other matter paragraph mostly, is there for the SS 600. Otherwise, usually there is, hardly any other thing which, gets reported in other matter paragraph. So again, that is, I'm not saying that only SS 600 is the one where, we use other matter paragraph. There could be other areas also, but majoritarily I have seen, SS 600 and other matter paragraph together. Otherwise, I have not seen any, major other reporting with respect to other matter paragraph. So that is the one thing. And let's say it's a disclaimer of opinion and it's a standalone financial statement. So if you see, okay, here, the comparative financial information, if you see the other matter paragraph over here, the comparative financial information included in the accompanying India's financial statement of the company are basis the standalone India's financial statement for the year 31st March 2019, on which we have issued a disclaimer of opinion dated this particular part. So they are just, highlighting a comparative part on the other matter paragraph. That's it. That in comparatives, we have issued disclaimer of opinion. So there is not much into other matter paragraphs compared to what we have seen. So another query is, what if when nothing is disclosed about a material fact which is pervasive and like a significant part of the entity is disinvestment? So it's material also and pervasive also. If that is the case, if that has not been disclosed, okay, I need to, provide and see when something is not disclosed, what I'm supposed to do. Number one, I need to give a modification. Okay. Now, which type of modifications then depends upon, okay, the materiality and pervasiveness. Now, if I say it's a material and pervasive both, so either adverse opinion or disclaimer of opinion. But why I choose adverse opinion? Reason because I know the amount, I know the impact, I know the disclosure which was supposed to be given. So I have the audit evidence available with me to identify what is not provided. That's why I'll go to the adverse opinion, not a disclaimer of opinion. If disclaimer of opinion is given when you don't have any clue with respect to, the amounts, the transaction or anything, you just have a number of figure in the balance sheet and you don't know background of it. So that's the point where I could say a disclaimer opinion, but here I have all the details and I know for the fact that it has been not there in the financial statement. At that point in time, I may prefer an adverse opinion, okay, but not a disclaimer of opinion. I hope, Charu, I have answered to your query. See, pronouncement, as I said, if you see the study material and everything which is available online on the BOS portal, okay, if you go to BOS ICAI, you will find all the study material over there. Let me show you the BOS portal also. Just quick glimpse. You guys are already aware of that, but just let me provide you one glimpse of that and where to see what. So see, this is boslive.iti.org. You can go to the study material over here. Okay. You can find the new final English medium if you prefer this one. Then you have paper 3 and you have all the 3 modules available over here. And if you need pronouncement with respect to, the standards on auditing, what you could do is you can go to ICAI's website, icai.org. Okay. Go to ICAI.org go to resources, and you have an engagement and quality control standards complete text. Over there, all the assets are listed in detail with a complete text. For example, as of now, we were referring SA706. If I click SA706, the complete text of SA706 will come up in front of me. Okay, you can now download and you can read this particular standard. And whatever we have discussed, again, is covered over here only. Okay, so you can get these standards from here. All the text is available. You can use this text. So the text of the pronouncement is this one only. So you can download each and every standard from here. Okay. Further, if you want to understand more on the new scheme, like, okay, outlines and everything. So what you can do is you have section wise weightage over here. Go to the final one. You'll get the details of section wise something, in detail, like what is the scenario and everything is available over here. So you can get a general idea of section wise what is the scenario. Okay. Let's say, for example, chapter 7. So if I talk about standard, it has 45% to 55% weightage. Okay. And then we have digital assurance, chapter 12, 3 to 6%. We have group audits, special features, section 3, 17 to 24%. Developing in emerging areas, 3 to 6% and everything. And 17 to 24% is a professional ethics one. Okay. So like this way, you can identify the coverage over here. And the thing is, do we need to read the pronouncement over here? If you have time, then that's very good. If you read this one, no, this is the base. I'll say this is the base and bare act like of thing. If you read this, and if you can, if you have a time to read, I'll suggest do read it. Do read it. Very, very important. Okay. Invest time, read, because not only this, you have this particular part, the application and other explanatory material to the standard. Like, they start with A detail. So they not only explain you the provisions of the standard, the paragraphs of the standard, but these will also enhance your clarity. Like, for example, circumstances in which an emphasis of matter paragraph may be necessary. They will provide you some examples. Okay, when an emphasis of matter paragraph is necessary. So, these bare, pronouncement plus explanatory material will definitely enhance your understanding. Definitely. If you have time, do read it. Trust me. And they have provided a list of, requirement also of emphasis of matter paragraph. So SA 560, SA 210, SA 800, talks about emphasis of matter paragraph in conjunction with SA 706. And if we talk about other matter paragraph, SA 560, SA 710 also talks about other matter paragraph. They have, kind of illustrative audit report have been given. So you can go to illustrative audit reports. Okay. So a lot of details is given in these pronouncements. A lot of details. Plus, I'll tell you one more thing. If you go to committees, non-standing committee, go to Auditing and Assurance Standard Board. Auditing and Assurance Standard Board. Over there, you will find a lot of, publications. A lot of publications. For example, let's say we refer to the 706 one, if available. Yeah. Implementation Guide on Reporting Standards. This one. Implementation Guide on Reporting Standards. 700, 705, 706. This is issued by ICAI, May 18. Okay. And usually there is hardly any change in that. So you can refer these ones. So over and above the standard, they will also, provide you with clarity about, how to implement these standards. So again, a practical side, you can say, is covered in this implementation part. I'll just show you one example. Let's say this one, EOM and OM paragraph. Okay, SA 706. So here in a question answer form also you will get some details. For which audit does the auditor need to follow this revised reporting standards? Is SA 706 applicable for audit reports signed after this date? Does insertion of this in the audit report make the opinion modified? So a lot of question answer wise, things are given like a FAQ. Okay. And other than this, also you will get a lot of details with respect to the standards. So I always suggest if you have time, go and read these implementation guides, go and read on the guidance notes. It will really, really help you to understand. Plus, you can also attend webinars. Let's say, for example, there's a webinar on, there was a webinar yesterday. There was a webinar on risk assessment. If you see over here, there was a webinar on the risk assessment and response to the assessed risk by the faculties. Again, no fee was required. Why not you? Why you can't attend? You can attend. You can learn further. So there's a lot of material. There's a lot of ample of opportunities to learn already available on the ICAI portal. Just keep an eye. If any webinar is coming, go and attend it. It will again enhance 315 330 details on a practical way. Okay. Now again, webinar organized by ICAI on 14th December with respect to general insurance, audit of general insurance. I know this is not applicable now, that in that much detail, but for your understanding, you can go and attend. Okay. There is no fee required. So in this way, you can, attend webinars, you can, go and check the details, on the portal, you can find a lot of material. And if you have time, I will suggest invest, because the more time you will invest in these in readings, you will get a clarity of the topic. Then you will not required to mug up the topic. Trust me. As of now, what people think is audit means I have to mug up. No. Attend these webinars, read the material, then you will understand why we do not need to mug up and why it is already logic driven topic. Okay. So invest time, go, try to read as much as possible. Try to attend these webinars also. Trust me, it will enhance your understanding a lot. Let's come back to the our part. Okay. So there is one more doubt with respect to page 5.7 of module. Just a minute. 5.7? You're talking about chapter 7 or chapter 5, Charu? Can you specify this one? Thank you, Virat. Thank you very much. Charu, can you specify if this is chapter 5 or chapter 7 that you are referring over here? Then other question is, can you please list down the essay for which we require working level knowledge and for which we require expert level of knowledge? Guys, one thing, make sure this at the final level, everything should be expert level knowledge. So nothing is, expected as a working level knowledge. Okay. So if you talk about that, okay, I should have, working level knowledge for these standards. I don't think so that will work in that way, because when, integrated case scenarios will come, it will require expert level of knowledge of all the standards. Okay. It will require expert level of knowledge of all these standards. So I would suggest, go with the, that you might require expert level of knowledge for all the standards. Don't go only with, that, okay, you might be requiring only, working level knowledge. Okay. Any other doubts? Any other doubts? One more thing, guys, we will keep, a doubt session on SA 700 series because it's a very important part. We will keep a separate doubt session on this also so that, you guys can take benefit of the session and you guys can, understand further on this particular SA 700 series if you have any doubts. Okay. So don't worry if you have missed out the lecture, if you have, you are not able to ask the doubt. Don't worry, we will be also, uh, have a different part. What is say? Lecture on the reporting doubts. Okay, so you are referring to para 5.7. Okay, just a minute. This one, other considerations relating to an adverse opinion or disclaimer of opinion. So you want to understand what is these other considerations. Okay. Remember this we talked about, can I issue two different opinions in a same financial statement? So that is the same thing that is being discussed over. The auditor shall not include an unmodified opinion with respect to the same financial reporting framework on a single financial statement or one or more specific elements of accounts or item to a financial statement. When it is necessary for the auditor to express an adverse opinion or disclaimer of disclaimer opinion on the financial statement. Means I cannot issue two different opinions. One is adverse and one is unmodified on same financial statement. I cannot issue disclaimer of opinion and unmodified opinion on two different on same financial statement on two different elements. I cannot. And auditors shall not do that. That is the thing. That other consideration relating to the adverse opinion and disclaimer of opinion. But qualified is not mentioned. Reason because I'll tell you. When we issue a qualified opinion, I'll tell you with an example. Let me go to the qualified opinion. This is the qualified opinion. Now, when we issue a qualified opinion, we say that except for the possible effects of the matter described in the basis of qualified opinion paragraph, the aforesaid financial statement give information required by the Companies Act in so manner required and give a true and fair view generally accepted in India. Means in qualified opinion, what I'm saying is, except for these matters, I'm giving unmodified opinion. Kind of two different. I am modifying the opinion with respect to these matters, but other than that, everything is fine for me. So kind of two different opinions is there when we talk about qualified opinion. But have you seen that in adverse? Do we write in adverse like this way? Okay, except for the matter specified in the adverse opinion, I give a, the financial statement gave a true and fair view. Answer is no. In adverse opinion, it is not the case. In adverse opinion, you say they do not give at all. So I think I had one example with respect to the adverse opinion also. Just let me check. Okay. Here in the disclaimer of opinion, if you see, they do not say, except for the matters described below, for which we do not give opinion, rest of the thing is fine. No. Here say we do not express opinion at all in the case of disclaimer. Same way in the case of adverse also, they say we do not issue any opinion. Like in disclaimer, the way they are saying that we do not issue an opinion, in adverse they say that, okay, we have not received the, relevant, what you say, information, and that's why we are issuing an adverse opinion. I think there is one report. If I'm not sure, if I'm sure, I have one report with an adverse opinion. Just let me show you. Now, again, that's also disclaimer of opinion. Let me go one back. So a lot of disclaimers of opinion and hardly to find any adverse opinion. If you guys have any adverse opinion, do let me know. I will definitely look into that. I will definitely show you. But mostly it is, what do you say? Disclaimer of opinion I could see, not the adverse opinion. But in the disclaimer of opinion, as I told you, it's, in this way only. Let me check if I have another one, if possible. No, I have only, what is it? Disclaimer of opinion, not these, uh, not adverse opinion. No. So yeah, if I'll find adverse opinion, I'll definitely show you guys. But majority, the way I'm saying you, disclaimer of opinion works is, we do not say that except for these matters, we are issuing a disclaimer of opinion. No, like for these matters, we are issuing a disclaimer of opinion. What we say is, we overall issue a disclaimer of opinion. Okay. Unlike we saw in the qualified one. So that's why other considerations relating to adverse opinion and disclaimer of opinion is that we do not issue two different opinion in case of adverse and disclaimer. Okay. So then there is a SA 701.C. Just a minute, let me go to SA 701.C. Shruti, can you page 15? Okay, great. Point C. This one? Starting. Are you referring to this one? Like when SA 600 is using the work of another auditor applies, further describe the auditor's responsibility in a group stating, okay, the financial information component. So this is with respect to my kind of, yeah, it's a part that, other matter paragraph that is, part of other matter paragraph that I'm reporting that is mentioned over here. Okay. That what could be their auditor's responsibility for the audit of financial, okay, auditor's responsibility section. And that comes only in the consolidated financial statement. Remember, in consolidated financial statement, we saw this responsibility. Let me show you. In the consolidated financial statement, I remember we saw this particular detail, and this is the standalone. Yeah, over here. This is the console. And if we go to the auditor's responsibility, this is the auditor's responsibility section. Over there, we will have this kind of responsibility. This, yeah. If you see over here, obtain sufficient and appropriate audit evidence regarding financial information of the business activities within the group and its associate to express an opinion on the consolidated financial statement. We are responsible for the direction, supervision, and performance of the audit of the financial statement of the business activity included in the consolidated financial statement, of which we are independent auditors. For the business activity included in the consolidated financial statement, we have been audited by, which have been audited by other auditors. Such other auditors remain responsible for the direction, supervision, and performance of the audit carried out by them. We remain solely responsible for our audit opinion. Same way, means what it is saying that this particular part here it's kind of providing auditor's responsibility when it comes to the consolidated financial statement. So what is the auditor's responsibility of the when it's an audit of consolidated financial statement? We saw the way it was there in the audit report, just talks about the same thing. Okay, I hope I have clarified your doubt, Shruti. Okay, so you are referring to different paragraph. Which one? Recording is there. Okay, understood. So you are referring to this paragraph here. So yeah, this says that unless any law or regulation requires auditor not to include key audit matter in the audit report, okay, then in that case, if any law and unless a law and regulations preclude public disclosure about the matter, which is in extremely rare cases, means if the law and regulation requires auditor not to disclose, again, which is extremely rare in case, the auditor should determine, okay, that a matter should not be communicated in the audit report because the adverse consequences of reporting the matter would outweigh the public interest of such communication. So, for example, if there is such matter which, if you report, will have a negative consequence compared to the benefits of reporting, in that case, the auditor can decide not to report the matter in the key audit matter. For example, if there is something with respect to the key trade secret of a company and which is also a key audit matter paragraph, then at that point in time, you need to understand, should I report that key what do you say, trade secret or key secret? For example, company is working on a new project, which is very much crucial to keep confidentiality. Otherwise, competitors will come to know and that could, negatively impact the company. Okay. Now, again, company is working on that project, so company is investing some amount or doing something. Now, it's also a key audit matter for you because auditing that particular project is very difficult. Will you report that particular part in the key audit matter? If yes, then if the project was supposed to be kept confidential, company will face a difficulty. Company will incur huge losses because now the matter will get public and it may, outweigh the benefits. The negative consequences will outweigh the, benefits of reporting the matter. So at that particular point in time, you need to understand that, okay, it could be a very rare case, but yes, there are cases where we should not report a key audit matter because of the negative consequences of reporting the matter. Okay. Any other doubts, guys? Any other doubts? Viraj, I am not able to get your doubt. Can you just repeat it again? Yes, the matter, Shruti, in that case, the matter, if you think the negative consequences are more compared to the benefits, either you can report in such a way that, the negative consequences are not applicable. Okay. Let's say, for example, you do not mention about any specific project, you just give a generic idea. Okay. Or if you think there is no point in giving a generic disclosure in key audit matters, or it is not serving the purpose if we remove the descriptions or the details, in that case it will not be reported at all. But having said that, it should be there in your audit documentation, audit working papers that this matter was selected for key audit matter. You need to list down in your audit working papers that why you think this matter should not be reported, the detailed explanation, the negative outcomes, comparing the public interest, benefits, and then when this type of scenario comes, we take a lot of consultation with experts, consultation with engagement quality review partner, EQCR, okay, consultations with different partners in the firm, and then we decide whether to report on. So it's not a pretty simple way, directly yes or no. A lot of consultations are involved in this. Uh, that depends upon if it is disclosed. See, if it is already disclosed in the notes to accounts, then what is the problem disclosing again? So if management is also they themselves are disclosing, then there is a no negative consequences. So understand when the negative or adverse consequence will come. When it is not disclosed by the management due to some confidentiality, and you are also want to avoid those negative consequences. If it is disclosed already by management in notes, then what negative consequences will come if you will disclose also? Okay, so there is one more doubt with respect to key audit matters, determining key audit matters. Okay, yeah. So this point, significant judgment. You want to understand determination of the key audit matters, and what is this point? Significant auditor's judgment. Now remember when we discussed key audit matters at that particular point in time, I discussed how to determine a key audit matter. What are the things which will help you to determine a key audit matter? Let me go back to that. So at that time, remember I talked about significant auditor judgment relating to the areas in FS that involve significant management judgment also, accounting estimate, high estimation uncertainty. So if these are the scenarios, if there is a significant judgment involved, either of management judgment or accounting estimate, you can take that particular area as a key audit matter. And that is being done also. So if I talk about in other reports, if I show you, which we discussed with respect to the key audit matters. Okay, if we see over here, in key audit matters, they provide why I have taken this as a key audit matter. So remember when we discuss about the reporting key audit matter, we see what to report and how to report. What to report is, see there, as a part of our risk assessment, we determine that the ECL on such loan have a high degree of estimation uncertainty with a potential range of reasonable outcomes. That's why this is a key audit matter. Let's say for anything else, uh, uh, if I show you another example over here, yeah, this we discussed. See over here, the key audit matter due to significance of the amount as in stated in the consolidated financial statement and complexity and nature of transaction. So they provide why. If you see, subject to a significant level of judgment. Subject to a significant level of judgment. So based on if that is a judgment part, a significant judgment by management, accounting estimate, those areas can also be a key audit matter, subject to other conditions. Okay. I hope I have answered your question, Charu. Any further doubts? Any further doubts? Any further doubts, guys? Any doubts? No? No doubts? Okay. Okay. If no further doubts, let's proceed further. You can ask your doubts, no issues. You can write your doubts. I'll take it up, in between. Don't worry on that. So you can share your doubts. So quickly, I want to cover one more essay, okay, which is already there in the study material. Just let me go to the one. So let me show you some more things over here. So it is, distinction between notes on accounts and qualifications. We have already seen this part that qualifications are there when there is a misstatement, and notes to account provide additional information to the financial statement. So qualifications are based on the misstatement or if there is a missing notes to accounts. Okay, kind of. So you could go and refer that one also. Distinction between audit report and a certificate. See, in an audit report, you provide a reasonable assurance, but in a certificate, you verify the facts. Okay, which is higher level of assurance compared to an audit report. And audit report, we, is an opinion based. We issue an opinion. At times in a certificate, a opinion might be issued, a opinion might not be there. Okay, so there are various, part of a certificate. There could be different type of certificates. Okay, so that could be also there. So there is a huge difference between a certificate and an audit report. We have already seen SA 216 detailed communication with those charged with governance, and we have discussed multiple times this particular area. Now coming to the part is reporting requirement in case of comparative information. That is SA 710. Okay, I'll quickly cover this particular part. So in an audit of a financial statement, basically there are two broader approaches with respect to the comparative information. Okay, one is a corresponding numbers, corresponding figures. Second is a comparative financial statement. When I say corresponding figures, okay, means these are the numbers which are there in the financial statement, but auditor is not issuing any opinion on that number. So for example, the auditor opinion on the financial statement refers only to the current period. Opinion only to current period. For example, let's say I'll go to the financial statement, one of the financial statement. If you see this financial statement over here, audit report and financial statement, my opinion is only referring to 31st March 2023 and for the year then ended. My opinion is for 31st March 2022 or year then ended. Okay. But when I prepare the financial statement, I have 31st March 2022, 31st March 2021. But my opinion is on this only. Opinion is issued on this. Have I mentioned anywhere that I give an opinion on 31st March 2021? No. In my audit report, I never mentioned that I have an opinion on 31st March 2021. I say I have an opinion on 31st March 2022. That's it. So in this case, This type of information, this particular information is known as corresponding figures. This type of information is known as corresponding figures. Okay, again. This type of information is known as corresponding figures. Now question comes is, if this is the corresponding figures, then what do we mean by the second part? That is comparative financial statement. Now in comparative financial statement, the auditor issues opinion to each period. Auditor issues an opinion to each period. Okay, let me show you one example for this. Just a minute. Let me bring up that particular document. So in case of comparative financial information, I give the details. Okay, I give an opinion on each period. Again, I give an opinion on each period. So my opinion is not only based on one particular year, but it is based on multiple years. And for this, I will show you a document called DRHP. Draft red herring prospectus, which is issued at the time of IPO. The companies take out these documents at the time of IPO, DRHP. Okay, so draft red herring prospectus. Over there I'll go to the section financial information. What happened? Just a minute. Yeah, financial information. If you see over here in this particular part, it says that we have examined the attached restated consolidated financial statements of this particular company, its subsidiaries, okay, including this, which comprises of restated consolidated balance sheet at, now this is very important part. If you see, three particular years are given. 31st March 23, 31st March 22, and 31st March 21. Again, everywhere if you see, 3 years will be given. And for each year ended of 31st March 23, 22, and 21. And if you go to the financial statement, you will find the same years over here also, 23, 22, 21. So the opinion is given on all years here. And that's why this makes it a comparative financial statement, CFS. Not consolidated, but the comparative financial statement. Comparative financial statement means where auditor has opinion referring to each period for which the financial statement are present. Example contained in DRHP. You can go in DRHP. Here example, normal FS. So it will, serve a point of remembering that when you will remember the topic, you will come to know, okay, this was the point that we were talking about. That is the difference between corresponding figures and comparative financial information. Why this is important to understand? Reason because the requirements of auditor for each of the category is different. So when there is a comparative financial information, the auditors are required to obtain sufficient and appropriate audit evidence about comparative information included in the financial statement, whether they are, in all material respect in accordance with the requirement of the comparative information as per the applicable financial reporting framework. So auditor's responsibility is to ensure that these together, these both are known as a comparative information. These comparative information are appropriately reported in FS as per applicable financial reporting framework. And this obvious that normal FS will be prepared as per Companies Act Schedule 3 and Ind AS, but DRHP will require additional reporting requirement as per SEBI listing regulations. Okay, and in that case, applicable financial reporting framework will be over and above what is there for the normal FS. So, for comparative financial information, auditor needs to ensure that this information agrees to the amount and other disclosure presented in the prior period. Accounting policies are applied consistently in the current period, and if there has been a change in, then change has been appropriately disclosed. Okay. So for the comparative information, I'm talking about both. These both together are known as the comparative information. Okay. Auditor needs to ensure that they are agreeing with the amount which are disclosed in the prior period. Kind of you need to verify with the prior period numbers. Accounting policies are consistently applied, and if there is a change, then disclose the change. Okay. And they need to take a written representation. Now, with respect to the corresponding figures. Okay. Now come to the reporting part with respect to the corresponding figures and comparative financial information. If there was anything with respect to previous year numbers, okay, where there was a modified opinion, if there was anything in the previous year number where there was a modified opinion and that has not been rectified, then in that case, you will refer a corresponding figure. For example, I have one example also, good one. See, in this basis of qualified opinion, if you see here, okay, here we are referring to something, with respect to the and company which was incurring losses. Okay, and there is since 2019 or something has been there. Okay, and that has been reported here. Same way, if you see 2022 report, you will see this particular note. So even I'll show you in the standalone financial statement. Just a minute, let me show you the standalone one. So here is not a qualified one. Okay, no issues. If I have here something. So basically, I only report, okay, a matter of a corresponding figure, in my opinion, only when there is a modification. Okay. Usually, I do not mention a corresponding figure's number or any reference to the corresponding figure unless and until there is a modification. So, if there is a modification, then only I will refer a corresponding figure. So, auditor's opinion shall not refer the corresponding figure except for these scenarios. Except is when auditor's report in previous year contains an other than an unqualified opinion. Means there was a modification in previous year. Modification in previous year. Now, if there was a modification in previous year, and if that has not been rectified, so you will refer that particular part in your current year audit report. If you refer that part in your current year audit report, means you are issuing an opinion or something on the corresponding figures. We do not refer corresponding figures unless and until these are the scenarios. Number two, if auditor is of the opinion that he has a sufficient evidence in this regard that a material misstatement exists in the financial statement of prior period, which was not addressed earlier, means you have some information which says that the previous year figures contains misstatement which is not rectified yet. Then only you go and you mention a corresponding figure or an opinion on corresponding figure. Opinion on a corresponding figure means mentioning something about corresponding figures in your financials, in your audit report. Clear? And this particular part we have already seen. If the prior period financial statement is not audited, then auditor needs to obtain sufficient and appropriate audit evidence that opening balance does not contain any material misstatement. That is as per we have already discussed in essay 510 how we need to check for the opening balance if that is not audited. Simple. There is nothing much in the this particular part. Again, I'm telling you, corresponding figures means where I do not issue an opinion. Normal financial statement, comparative numbers. That's it. That's a corresponding figure. I only mention a corresponding figure when there is a either misstatement which is not rectified, okay, and was reported in the previous year audit report, or I know for the fact in the current year that previous year numbers are wrong. Then only I will refer to a corresponding figures, otherwise I will not refer. But when I talk about comparative financial information, financial statement, this particular part is basically similar the way you audit a financial statement. So you are issuing opinion each period. So you need to audit each period. Simple. Okay. Modification can be adverse, can be disclaimer, any modification. Now, there are scenarios where, a prior period was audited by some other auditor. In that case, if a financial statement of prior period were audited by a preceding auditor, okay, then auditor is required to state that in his audit report that the financial statement of the prior period were audited by some other auditor, okay, the type of opinion he issued and the date of audit report. So if I have a good example for this one, just give me a minute. So I have one good example of this particular part. Just give me a minute. Let me present on my screen. I'll show you both the scenarios where we have a precedent auditor plus where we are issuing opinion on a corresponding figure because there is some issue. Okay. Just don't go on the name because name is that not that much important. This is the publicly available information. I'm just taking from the publicly available data. So this is the consolidated. Let me show you the standalone one. These all are example I'm showing you for your understanding, so that you can have a good clarity about the topic. Code for standalone. Okay, clear. If you see this particular part over here, which is there in other matters. So the financial statement of the company for the year ended 31st March 27 included in these standalone financial statement have been audited by the precedent auditor who expressed an unmodified opinion on these statement on 26 April 2017. Our report is not modified in respect of this particular part. So three things that they are talking about. First of all, financial statement and period of the financial statement, unmodified opinion, type of opinion, and date on which that opinion was issued. And that is a requirement basically. If you see the requirement, it says the financial statement, the period, type of opinion, and date of audit report in case of preceding, and that is required to be reported in other matter para. Pretty simple. One more report I'll show you where there is an opinion on the corresponding figures because there was a misstatement. Again, don't go on the name. I'm just showing you with an example. So this is for the period ending 31st March 2019. So the period here is 31st March 2019. But if you see accounts in respect of financial year 13-14 to 17-18, I am mentioning some comparatives here. I am mentioning on the corresponding figures that September 18, April 23 to September 18. I'm going on the previous year numbers. Okay, not on 31st March 2019, but April 13. Okay, April 13 numbers. I'm going on April 13 numbers, not on March 19. So I'm reporting on the numbers. I'm mentioning the details on the numbers which are not part of the current year. Which are not part of the current year report. Why? Because there is a disclaimer of opinion. There is a disclaimer of opinion, means other than unmodified. If this is other than unmodified, and if there is a misstatement, then I can refer to the corresponding figures. Clear? Any doubt? Any doubt? So this is reporting for corresponding figures also, for comparative information also, that is comparative financial statement. So for example, if, let me show you, if we have in that DRHP different auditor, then it will definitely be there in other meta para. In this case, in TRHP, yeah, it's not there because they might have audited all the financial statements, so that is fine. But in this also, if their financial statement has been audited by some other auditor, precedent auditor, so they will definitely mention that particular thing. Okay, there was a this particular was audited by a precedent auditor, and accordingly we have taken the report. So I will try to find an example for the comparative financial statement also. Okay. So in D1, it is similar. Like, if there is an issue that you have identified, then you will, compare. Let's say, for example, you are auditing comparative financial statement and you have identified an issue in previously. So what is comparative financial statement? Means you are again issuing an opinion. So in this case, sorry, in case of DRHP, they are issuing opinion again. Okay, they are issuing opinion again. This is issuing the opinion again. Now, when you issue an opinion again, you audit it again. Okay. If you are auditing again, you may identify some observations which were not there earlier. Okay. You may identify or you might not. Let's say, for example, an hypothetical example. Let's say for financial year 21-22, financial year 22-23. Okay, so earlier, original opinion. So original opinion was unmodified. Both. Let's say when you were auditing financial year 24-25 or 23-24, sorry, my mistake. Okay. Then at that particular point in time, you decided to audit all the 3 years because of XYZ reason. Let's say DRHP opinion. You decided to audit it again. So this was getting audited first time during DRHP and these were re-audited. So here I issued an unmodified opinion. But here I identified something which was not identified earlier. So I identified some observation for the second time, but I did not identify that observation when I did when the financial statement audited for the first time. So I issued a qualified opinion. And here unmodified. Now see what will be the scenario here. I have same financial year but two different opinions. So two different opinion for same financial statement. Now that's an issue. That's a very big problem because say two different opinion, one is qualified, one is unmodified for the same financial statement. And let's say, for example, this was audited by ABN company, and this is audited by BD and company. Okay, that was ABN company who originally audited. Now second time audited by BD and company. Think two different opinions, same financial statement, two different auditors. Very big problem. To avoid that, there is a requirement in the standard that when when if you are issuing an opinion which is differ from the opinion previously issued, means previously it was unmodified, now you are issuing a different opinion than previously issued. Okay, in such a case, in such a case, auditors shall disclose the substantive reason for different opinion first of all in other matter paragraphs. First of all, disclose the reason why there is a different opinion. If that different opinion is because of the material misstatement present in the previous audited figures of that financial statement, auditors should report that to appropriate level and request preceding auditor to be informed. And if preceding auditor is amending and issuing a new audit report, then auditor shall report on the current period only. So for example, in this case, if you ask management, okay, management go and inform A and B company that they have missed out this thing. In that case, if A and B is rectifying and they are issuing new revised modified opinion, qualified opinion, then don't issue opinion again on FY 22-23. Use this opinion. Use this amended opinion. But make sure that management, communicates this to A and B company. That please change the audit report because there is something that you missed out. So that is second and third point of B with respect to comparative financial statement. In second point, the difference in the opinion is not because of a misstatement. So here, difference in opinion is not due to misstatement. Let's say, for example, earlier it was a qualified opinion. Now you are issuing unmodified. Means earlier it was qualified. Now I am saying it is not qualified. Difference is not due to misstatement. Then why I will, include a qualification when I am saying it's not qualified? So in other matter paragraph, I need to specify, okay, earlier it was qualified because of XYZ reason, but now as per the new applicable financial reporting framework, this is no longer a qualification. That's why I'm issuing an unmodified opinion. So in our example, we saw unmodified to qualified. What if it is qualified to unmodified? In that case, point number 2 will be applicable. So that is your essay 710, and this is a chart, very important one. You should refer. I hope everyone is clear with this. Any doubts? Any doubt, guys? Let's say, for example, here you are saying this one, if it is same auditor, if you are the same auditor, you identified a mistake in your previous year figure, go and amend it. Simple. Then again, let's say, for example, you are amending the previous year report. Okay, then why you will again issue a different opinion? Means you are the one who issued a previous opinion. Now you identified that opinion no longer holds good. You need to change opinion. You will change opinion in previous year report also, and in current year you will also give the same opinion. So if the problem arises, then there is a different auditor, because at that particular point in time, changing or amending the audit report becomes very difficult. But if it's the mistake done by the same auditor, he knows what to do, where to rectify. So not an issue for that, unless and until he rectifies. Okay. The next part that I want to discuss is SA 720, other information. Okay. And responsibility of auditor with respect to other information. Very important part. And won't take much time. So SA 720 basically talks about that what is the auditor's responsibility relating to other information. The auditor's responsibility related to or to other information. So here we need to understand two things. One, what is other information? And what is auditor's responsibility? With respect to other information. That's it. These two things. So first, what is other information? Second, what is auditor's responsibility with relation to the other information? Okay. Now, what is other information? When I talk about other information, okay, other information means simple. Financial and non-financial. Financial, non-financial information included in entities annual report. Okay. Financial, non-financial information included in entities annual report. That's another information. But there are some exceptions. Number one, other than financial statement. So, and auditor's report. Auditor's report, financial statement, notes to financial statement are not other information. They are excluded because that is a financial information. That is a financial statement. Okay. Second, preliminary announcement of financial information. I'll explain what is this preliminary announcement. Third, securities offering document including prospectus. Okay. Now these three are excluded. The question comes is what is, you know, preliminary announcement of financial information. Okay. So preliminary announcement of financial information is kind of a, information, that is disclosed, what you say, before issuing annual report. Before issuing annual report. So remember, company issues financial results. Company just gave a snapshot of the financial result for the period. These are the financial results for the period. This has happened. This has happened. Okay, kind of a snapshot of what has happened. So if that snapshot is there, kind of that snapshot is, this public, this thing, preliminary announcement. Okay. So that snapshot is kind of, preliminary announcement. That's his financial results just are issued. A summary of financial result, you can say that, company rolls out every year. So that is preliminary announcement. Securities offering documents or prospectus, DRHP. So any information contained in DRHP or preliminary announcement of financial information are not other information that auditor needs to, that we are reporting over here, or we are looking over here. Okay. So when I say other information, that are items or other items that are intended to, that are there in the annual report. Annual report, not preliminary announcement, not DRHP, not financial statement, not audit report, but other information which is there in annual report. Now, what is auditor's responsibility with respect to other information? So, auditor's responsibility with respect to other information is pretty simple. First of all, to consider whether there is a material inconsistency between other information and financial statements. Means whether there is a material inconsistency. Number two, whether there is a material inconsistency between other information and auditor's knowledge obtained in audit. Okay. And third one is to respond to material inconsistency and to report as per essay. First of all, let's understand what we meant by consider whether there is a material inconsistency. Okay. So a material inconsistency comes into the picture, okay, when the other information is incorrectly stated or misleading. What is that I meant by, let's say for example, I'll go to annual report. Now this is the annual report. And if I go to any of the page, I have these numbers. This financial and non-financial information is other information. This financial and non-financial information is other information which is not part of my financial statement. Let's say, for example, over here, okay, there is some number mentioned. Outstanding credit being 17.4%, shares 29.5%. Some numbers are there. Some information is there about company. Company is present on these locations. Okay, this is asset under management, percentage or whatever numbers are given. These numbers are given. Now, either these numbers will tie with FS, or either these will be in line with auditor's knowledge. How I'll explain. Let's say, for example, total operating expense. This one grew by 34% to this. I can tie this to FS. Okay, I can tie operating expense to FS. Fine. Number of customers on app was 35 million and new loan book was 26 million. So when I audit the financial statement at that particular point in time, I'll do the data analytics. I'll take how many new loans were issued during the year. So this will tie with my auditor's knowledge. Now, let's say, for example, customer franchisee grew by 20%. Again, this will tie with my auditor's knowledge. Let's say, for example, there is a misstatement or they are not aligning with what knowledge I have or what numbers are presented. Let's say in FS, let's say in this example, in FS, let's say OPEX is, hypothetical example, OPEX is, let's say rupees 8304 crores instead of 10130. Means the difference between this and this, there is a difference, there is a misstatement, and this difference between this and this is inconsistency. And if this inconsistency is material enough, as per materiality, it becomes material inconsistency. Simple. So, first of all, we, as an auditor, we need to determine when the management is planning. Now, to identify an inconsistency, we need to read the other information. Okay. So, to identify this, inconsistency in other information, auditor needs to, first of all, read the other information. But there's a slight problem that when we sign audit report, at that point in time, we don't have an annual return or annual report in our hand. Annual reports are usually issued after a month or 15 days of signing of audit report. In that case, how will you read other information? So, first of all, for that, you need to understand when management will release other information. If management is saying that, we will release within 15 days, draft is ready, get a version, draft version, review, draft version, if possible. Okay. If not, then read the other information after it has been issued to make sure that there is no inconsistency. Okay. You need to read after once it is issued. And if there is any inconsistency, then what should be done? If there is an inconsistency in the information, material inconsistency, either in other information or financial. See, there could be two scenarios here. Either this number is incorrect, either this number in financial statement is incorrect. If the financial statement number is incorrect, treat that as a subsequent event. If this number is incorrect, which is in other information, then go to management, inform management there is a correction required. If management agrees, fine. If management note doesn't agrees, go to those charged with governance. If those charged with governance agrees, good. If they do not agree, then you need to seek alternative ways to communicate, and seek the legal rights what you have. Seek legal options, what you can do in this scenario. Plus, there is a reporting requirement. So, usually in audit report, we provide a paragraph. We keep a paragraph on other information. Remember this? I remember last time when we discussed, I told you that okay, we will read as per SA 720. See what is relevant. The company's board of directors is responsible for the other information. The other information comprises of the board report, annexures, business responsibility statement, sustainability report, management discussion and analysis. Collectively referred to the other information, but does not include consolidated financial statement, standalone financial statement, and our audit report. Because we are issuing an opinion. On other information, we do not express any assurance. So our opinion on the standalone financial statement do not cover other information, and we do not express an opinion or assurance any form on it. So when other information comes, we are not expressing any opinion. However, in connection to our audit and the standalone financial statement, our responsibility is to read the other information, and in doing so, consider whether the other information is materially inconsistent with the standalone financial statement or our knowledge obtained during the course of audit. If based on the work we have performed, we conclude there is a material misstatement in the other information, we are required to report that. And we have nothing to report in that regard. That's it. We are not issuing any opinion on other information. Understand? Only our responsibility is to read other information and identify if there is a material inconsistency. That's it. If there is a material inconsistency, our information is we are required to report that fact. And they have nothing to report. But this is, we do not express an opinion of any form on the other information. So auditor will not issue any opinion on other information. So my responsibility is to read, and if there is any inconsistency, then to report as per aspect. This is not an assurance. Again, we are not issuing any assurance or the other information. That's it. We will read, we will identify inconsistency if there is there, and we'll report if there is anything. If possible, like if we are getting the other information in advance or we have a draft version, we'll report accordingly. If we identify later on, we'll either ask management to rectify. If management is not rectifying, we might communicate some through other way if possible. That's it. Pretty simple. Any doubts with respect to this? Any doubts? Okay. So with respect to SA 10, if the preceding auditor does not agree to amend the report, what should be the case in that case? If the preceding auditor is not agreeing to amend the report, you need to at least issue your report appropriately, and you need to specify that what was the earlier opinion and what you are giving the current opinion, the reason for difference in opinion. You cannot force the previous auditor to amend the report. But when you are required to issue your report, if previous auditor is not amending the report, mention why there is a difference. And if there is a difference because of the modification, then specify the modification in detail. Page 7.3 in my module. Just a minute. 38, 7.38. Which one? Starting from till explain thereof about the orange part. Okay, this one. So even if the auditor has expressed an adverse opinion or disclaimer of opinion of the financial statement, the auditor shall describe basis of opinion section the reason for other matters for which auditor is aware and that would require a modification to the opinion and the effects thereof. Yes. So let's say for example you are issuing a disclaimer of opinion where you are saying that you don't have an clue, you don't have a sufficient and appropriate audit evidence, but there is an area or there is something for which you have audit evidence, which is again a misstatement, but compared to the disclaimer of opinion, it's a small one. But again, yeah, it's a material. You have that, okay, this is a misstated one. This is a material misstatement. But on the rest of the part, which is more material and more pervasive, you don't have audit evidence. So the auditor is required to provide the details where you have a evidence and you are saying misstatement. Let's say, for example, you are issuing an adverse opinion, and somewhere you have other matters for which you are saying you have a evidence in your hand. Okay, in that case, auditor is required to provide details of that particular area also. So in adverse opinion, there could be one major area because of which I am issuing an adverse opinion. Okay. But I am not required to restrict my opinion to that part only. Whenever I am issuing my opinion, I need to mention all the details because of which either there is an adverse or if there is another misstatement which is material but not pervasive. So I have a material and pervasive also, but I have something which is material but not pervasive. In that case, I am required to mention that also. So this is, we have understood that, title I need to change, qualify or adverse. And I need to, disclaim an opinion on the financial statement. Then a reference is required to be there of in the auditor's responsibility and a statement about that evidence obtained is sufficient and appropriate to provide the basis of auditor opinion. I'm not required to include these things in the my audit report when I'm issuing a disclaimer of opinion. Remember, in auditor's responsibility, I have shown that there is a change in the auditor's responsibility paragraph when there is a disclaimer of opinion. For example, if I have a disclaimer of opinion over here, yeah, wait, yeah, disclaimer of opinion. So usually in my audit report, I provide a reference to the auditor's responsibility. If you see normal audit report, in basis of opinion, okay, I have a reference to my responsibility. This one. Our responsibility under those standards are described in auditor's responsibility for the audit of standalone financial statement section of our report. This particular line not required to be mentioned when disclaimer of opinion is there. Not required to be mentioned. Plus, in my responsibility part also, there is a change. So if I show you the disclaimer of opinion now, see, this line is not there here. This line will not be there. Even on the basis of disclaimer of opinion, this line will not be there. This will not be mentioned. And in your auditor's responsibility section, you say that you have not received appropriate audit evidence. However, because of the matter, this particular part, however, because of the matter described, you are not able to obtain sufficient and appropriate audit evidence. Auditor responsibility drastically reduces compared to normal opinion and disclaimer of opinion because you are not able to fulfill your responsibility. Then you are not required to mention also. Simple. Clear? Any doubts? So don't worry, guys. If you have further doubts, I'll suggest give a read to the whole topic. In the next lecture, I will, discuss in continuation to that few things I need to more discuss. And then we will also start chapter A if time permits. But there will be a separate session on doubt, doubt session on this particular part. Okay, a separate session to discuss the doubt of SA 700 series or reporting chapter 7. So don't worry on that. Okay, guys. So that's it for the today that we have discussed on SA 700. Sorry, 700 series, including till SA 720. I suggest after this lecture, take some time, revise whatever we have discussed today, 710, 720, go to the study material and come up with your doubts in the next lecture. Okay? Thank you, guys. Thank you for participating today. I will see you in the next lecture. Thank you.